So what I would tell you to do is you can stack either two ways, horizontally or vertically.
Okay.
Right? Vertically essentially is I'm going to go get one credit card from Equifax, one from TransUnion, and then one from Experian. Right? That's vertically. And then you can stack horizontally where you're going to go get all Equifax, all TransUnion, and all Experian. I've tested both. There really is no difference. Some people will tell you, oh, open multiple tabs, click, click,
hey,
click.
man, you beat me to it.
Yeah, that ain't it. That ain't it.
Yeah.
And when you first get into it,
Yeah.
you try it, right?
Yeah,
So
yeah.
these are tested and trial. It doesn't make a difference. All you need to know is which bureaus are pulling from, what banks are pulling from what bureaus. If you know that, we can go get busy. You want me to give them a whole funding sequence?
Oh, let's go. Let's do it. I mean, let's break it
Sure.
down. Yeah, for sure.
Bet.
Let's go.
So make sure y'all pause this part, go back, rewatch it. This is how you go get $100,000 to $200,000 in funding, right? So if I were starting a funding sequence, what I would do is, let's say I'm starting with Experian, I would go check out.
Hey, business owners, what if I told you that for just 90 cents a day, you could get access to $45,000 in business funding? I just launched my Credit Mastery community where inside you're going to be getting exclusive access to our in-depth training program worth tens of thousands of dollars that's going to teach you the exact strategies you need on how to restore your credit and on how to properly structure your business. You're also going to be getting access to a financial consultant with over a decade of experience in the funding space that's going to be working with you to reach your financial goals in half the time it would take if you were to do it on your own. And we're going to be providing you 2 coaching calls a week where we're going to teach you the exact banks that you need to go to get access to anywhere between $50,000 to $100,000 in business funding. This is the same community that helped Pat access $50,000 in funding from Chase, help Alvin get $8,000 in funding from Amex, help Matt boost his credit score by over 150 points, and help Donna delete a bankruptcy from her credit report. So if you're interested, click the link above or below the video to join now, and we'll see you on the other side of success. Let's go, family.
Ladies and gentlemen, this is the Marvin Francois Show, your #1 source for all things business, finance, and investing. And today, is a very special day because our guest today is a mentor, coach, entrepreneur, investor, and business funding expert extraordinaire. He's the CEO of Influence to Impact, a company dedicated to equipping entrepreneurs with the resources needed to make accessing funding to start and scale their businesses easier than it's ever been. To date, this man has done $20 million in funding for his clients, helped 50 of his students make multiple 6 figures online, but above all else, his impact in the space has been nothing short of priceless. Whether he's hosting digital masterclasses in front of thousands on how to get the bag and flip the bag, or providing free gems on all things funding on platforms just like this, his mission to help entrepreneurs fund and grow their business is proof that his success in the space is not coincidence, it's confirmation. And today, he's here to do more of the same. Ladies and gentlemen, from Boston, Massachusetts, I'm here with the one, the only, my guy, Mr. Darius Benders. What's going on, family?
What's going on? Hey, I gotta say that was the best introduction. I think I said that last time, but this one was even better.
Listen, I just got to keep setting the ball. When you
Boy,
bring
going
Darius
crazy.
Benders on your platform, it's either here or you're nowhere. You understand? It's either here or you're nowhere.
That was fire.
Most definitely, brother. How are you, family?
I'm good, man. I can't complain. Blessed, man. I would be crazy if I was to complain.
Come on now. I love it. I absolutely love it. Happy to have you back on here. You know, you are a TMFS alumni. This is your 3rd time being back. Yes. And you one of them ones, man. I'm talking about, I still have people breaking my DMs down, talking about, when you gonna bring Darius back? When you gonna bring Darius back? We need more game. We need more fun and sauce. And I'm just like, I'm trying to get the brother, but he's booked and busy everywhere. But we finally made it happen. Happy to have you back on, man. And I'm excited to get into the sauce, man.
Yes, sir. Let's do it.
I'm looking forward to it. Now, listen, I did a okay job introducing you, but obviously nobody knows Darius Benders better than the man himself. So for those who are unfamiliar, let's get them familiar. Who exactly is Darius Benders?
For sure. You did do a great job. So my name is Darius Benders, originally from Boston, Mass. Like Marvin has said, I've been in Atlanta, Georgia now for, this week will make 2 years.
Awesome.
So 2 years ago today. And yeah, I'm a funding specialist. We funded over 24. I got to update that.
Come on now.
$24 million in the last 18 months. And I just love what I do, man. We started off in the service of funding, and then we started coaching people. I always say when people start asking a lot of questions about how to, that's when you know that you have something you can provide.
I love it.
So yeah, I filled 7 businesses. This was the 9th. I had one. I was in the nightlife before this. That was semi-successful. I won't say that was a failure for sure. I had some good years, not so good years. And man, I love this game. I believe like entrepreneurship has been, the catalyst to all great things that have happened to me in my life. And I just started making it happen 2.5 years ago is when I kind of got into this. People always say, it seems like you've been doing it 5-10 years now. It's been 2.5. And I'm just excited for where we're headed, man. Impacting more people, helping more people.
I love it. Let's dive a little bit more into that because you said something super key. People see the Instagram highlights, they see the YouTube videos, they see the 7 figures and all this other talk, but people don't understand the real work that it takes to become successful in business. You touched on something. I want to dive deeper into it. Let's go back a couple years before Darius Bender's the business funding expert extraordinaire, because like you talked about, you actually come from one of those businesses being in nightlife.
Yeah.
I want to say a couple names. Let me know if any of these ring a bell. We got KGB. We got Savoy Lounge. We got Icon, just to name a few, and the list goes on and on and on.
Hey, yo.
So I need you to tell me, right? Because the people at home need to know too. How did you go from being in the nightlife scene to becoming one of the most well-known individuals in the funding space today? Walk me through that journey.
You got to work for like the FBI. So how you find those places?
Hey, man, listen.
Hey, that's crazy. Yeah, those are some of the. So I was in the nightlife industry since I was about 22 years old. 23 years old. I had quit my last job at the bank as I was a banker, ironically. And, it's funny. You would think, at the bank is where you learn a lot of stuff about finances, but I didn't find I learned anything for my short time there. But yeah, essentially, I had got thrown into the fire in terms of nightlife. It was a situation where I needed income and I didn't know what else to do, but I knew I didn't really want to work a job. So I had went out one night. I knew this girl she was promoting, so I asked her, I'm like, do y'all make money with this? And she was transparent. She's like, well, I don't make money because I just do it for fun, but there's money to be made. So I'm like, all right, introduce me to the guy who's running the night. So she introduced me to the dude who was running the nights, and he said, meet me, and I met him like 2 days later. We met on a weekend, did lunch, but I got to see his house, his family, how he was living. And I remember just asking him, I'm like, do you do other things or is this all from nightlife? And I remember he told me, most people think nightlife is not a real business, but if you treat it like a big business, it will pay you like a big business.
Come on now.
Most people treat it like a hustle or a side hustle, right? But from there, that was all I needed to see. I always say, once you see something, you can't really unsee it. So for me, I took the next 9 months and I just shadowed him. And at the time, I was a part-time personal trainer. That was one of my hustles. So what I was doing is, in exchange for him giving me game and telling me how he's doing these things and me working for him, I was also I was training him so he could get in shape, do what he wanted to do. So I ended up doing that for 9 months, and then after I ran my first night we sold out before like 11:30, and then the rest was history. I had ran like some of the hottest nights in the city for the next 4.5, 5 years. KGB, Savoy Lounge on Saturdays, and then Icon. We had long weekends, and we used to do that. So yeah, that's how I was in that. I always say nightlife, I'm so grateful that I did it. It forces you to be good at networking. It forces you to understand relationships. Relationships are so key in business. So I feel like that foundationally set me up to where this business, I won't say is easy, but a lot of the core values that I learned from it, they're transferable, right? I say transferable skills. Your job in a club is you're supposed to make every person feel like they're the most special person, right? I don't even remember some people's names sometimes. You're like, hey, what's going on? How's the family? Right? Because those are the type of things you got to do. You got to learn leadership. No one's going to follow the person that they don't feel confident that they have the ability to lead. They got to trust that you're going to pay the people who are working for you, the people who are bringing people out to the club, right? You're dealing with people who are handling a lot of money, so you have to create systems and all these things that are transferring to business. So I'm grateful. And that's how
I mean, you should be grateful because, you said it. A lot of the principles that you got from that space clearly have transitioned over to the funding space. Because I look up, it's a Darius Bender's testimony on my newsfeed like every other day. Talk a little bit about some of the success that now with you being in the funding space, we know what you've done, but some of your students have been able to do under you.
Absolutely. So I just got a text yesterday. 2 of my students, they've been in my program now for about 4 months, and they came from another program. And I know that, like, obviously, everyone teaches different style, but when they first came to me, they're like, hey, we're doing like $5,000 a month, but we can't really crack it. We got a few credit repair clients. We're not really doing much. So what we do is we specialize in teaching funding, and I teach them how to create credit consulting companies, because a lot of people leave money on the table by not offering consultations, even as funders. So they just did their first $25,000 a month, right? And then it's just so great for me to see their growth, because like I know what it's like. It's one thing for me to make money, that's cool,
right? But
the real value in what we do as a consultant company is seeing others be able to uplift. And now they had their first in-person event. They spoke at somebody else's, and their confidence, more than anything, the money's cool, but their confidence. I get to see the difference. You know how you can really see somebody leveling up, like the way they talking on the gram, they talking a little different now.
Yeah.
Make sure y'all tap in. We the best when it comes to funding. So just seeing their growth has been amazing. I got another one of my students, Alondra. She came to me. She's from Jamaica. Just her and her daughter. She making it happen. She just had her first $12,500 a month.
Let's go.
I got my guy Mills. He made $50,000 in the last 3 months. So we got a lot of people that's just really leveling up. And honestly, the service business, we talked about it before. I love it. It's easy money. But my favorite bag of all the bags is helping people because you get to see the impact and the change that they make on their lives. And I feel like there's nothing more valuable than that.
And listen, we're going to put that to the test here on this episode because you done empowered so many people. We about to empower every single person that's watching and tuning in right now with all the information you need. Here's what I want to do. I want to make sure you okay with this.
Yeah.
I want to free some people who's watching this episode right now.
Say less.
I want to teach individuals how they can get their personal credit right, how they can go out and get access to multiple six figures in funding, and then take that funding and go and create some cash flow. Can we do that?
Oh, yeah. Hey, listen, this is a free masterclass. If you're watching this episode, I promise you, make sure you save it. Make sure you put it in your number one, whatever you got to do. I'm going to teach you how to get your credit right, go get some funding, and then what to do with the funding. A lot of people show you how to get the money, but we're going to show you how to flip it, go make an extra $10,000 to $30,000 a month.
I love it. Let's get into it. So let's start off on the personal credit side because everybody wants to get $100K, $250K, $500,000 in funding. But it starts with personal credit. We got to make sure we're good on the personal side. So let's break that down. If I'm looking to get access to funding, but I know nothing about personal credit, I'm starting from ground zero. What is the first step that I need to take in getting my personal credit set up correctly for me to go and get access to funding?
Absolutely. So if you're at ground zero, you have nothing. And this is a common thing people come to me with. I want you all to remember two things, strength and age, right? So write those down, strength and age, all right? What you want to do is you want to start to build out your profile because a lot of times when people might come to me, they have a 680, a 700, but they have nothing on there. And you need to understand the lenders operate like you and me. So if you came to me and you're like, hey, I want to borrow some money, and I see that you don't have a history of paying anyone back or you don't have a history of making on-time payments at all, I'm not going to give you no money, right? So what you can do if you're at scratch is you can do something called adding credit builder accounts. That's one route, right? And some credit builder accounts you can check out. You go check out Self. You go check out Credit Strong. You can go check out Tomo. You can go check out Kovo. And then if you are paying rent, and most people are paying rent, right, what you can do is you can go check out Rental Karma and Rent Reporter. And the great thing about those accounts is not only are they going to show up as on-time payments every 30 days, but they're also going to allow you to backdate, right? And what I mean by that is when we talked about that age, the second word is now we can go back 24 months, which is going to help us now overall and increase that strength and age, right? Now, some people, they're like, okay, cool. What about building relationships? And I know we'll get into that more, but also what you guys can do if you're getting into these credit unions is you all can set up something called pledge loans, or at some places they're called shared savings secured loans, essentially the same product, which is now where not only do you start setting up primary accounts, which you're going to need, but you also build what's called an internal score with that credit union, which means when we do build, and we'll get to it more, is now when you go for apply for that product, now you're getting $20,000 and $25,000 because you set up a product that builds an internal relationship and is going to report to all three bureaus.
Okay, coming out the gate swinging.
Oh, yeah.
So one of the biggest questions I get, and I'm sure that you get, and this is important because right now we're talking about building out the profile, but every day, I probably got 3 of them sitting in my DM right now. Marv, how do I get a 720 score? How do I get a 800? How do I get a 780 score? For the people who are watching, I want to make sure we also demystify this as well. When it comes to getting funding, what matters more? Is it more about the score or is it more about the profile?
So if profile over score any day, I get people who come to me 690, we can go get them 80, 100, 120,000. I get people who come to me with 740, 750s, but we can't get them much. And the reason why is because it's going to understand your profile is a resume, right? So it exemplifies the work you've done, the work you've put in, the amount of time that you've been building up that report, right? So what you want ideally, a perfect profile to go get funding, right? You want at least 10 primary accounts, all right? Primary accounts are anything that's in your name, right? If we're talking about credit cards, we're talking about those credit builder accounts, we're talking about auto loans, we're talking about traditional loans, we're talking about lines of credit. Anything in your name is a primary account. Next thing we want, and this is before getting business funding, right? You want at least 4.5 years of age history, all right? So what you can do to go increase that age is if you feel like you just added a whole bunch of new accounts that I just gave you, your age will drop. But the way you can offset that is you can leverage, all right? You can leverage either a family member or a friend with something called authorized user accounts, which is essentially where they're able to add you to one of their credit cards that has a high age limit, all right? But understand, authorized user accounts do not replace primaries, right? These are what I call like the icing on the cake, right? And make sure that that person that you're adding your credit card on is trustworthy. So if
Yeah.
they're an entrepreneur and they utilizing their money a lot, taking risks,
Yeah.
that might not be a good candidate. This is for someone, maybe grandma that had the credit card 25 years.
Yeah.
She ain't doing nothing with it. That's who you really would want to leverage, right? If you don't have anyone you trust, because I know a lot of us don't, what you can do is you can go to tradelinesupply.com. And this is one of my favorite sites. Again, this is the icing on the cake. It's not what you do at first. But what you can do is you can go to trade line calculator within tradelinesupply.com. It's on the right-hand tab. You go down to trade line calculator. And what you can do is you can put in the average of all your accounts, and then you can add the credit card that you want to purchase from tradelinesupply.com, that age. And what it'll do is it'll let you know what the age will average out amongst all your credit cards, right? So let's say, for example, you have a Bank of America credit card and a Apple credit card, and right now you got 2 years of history, right? And you go add an account on there that has 20 years of history. Now it's going to average it out to help you increase your overall credit age, which now positions us to be able to go get funding, right? Next thing I tell people is you want to make sure your utilization is in order. Utilization is 30% of your whole credit profile. Most people come to me, they're like, yo, bro, I got all the data points, but my utilization is just high. What can you get me? Well, I can't get you nothing with that. You're at 50% utilization.
Right.
But what we can do is the same play I just gave you for age, we can also use to hide our utilization. So you all can also use trade line supply. And what you all can do is you can source by credit card limits. Now, what you want to do is you want to look for a credit card with a higher limit. Let's say you have 10,000 available credit and you're utilizing 5,000. Well, now you're at 50%. But if we were to go get our authorized user account from Tradeline Supply that has a $20,000 limit. Now the overall limit is $30,000, and that same 5K out of 30. I'm not a mathematician, but I think that's under 20%. So now we're in the ball game, and now we're in a place where our utilization's under the 10%, which is ideally what we want. At the most 15%, but ideally, between 2 and 9% is ideal. And those three factors, obviously, on-time payments. You need 100% on-time payments. You need to make sure you have no derogatories, no charge-offs, late payments, repossessions, collections, none of that. And then the last thing is going to be inquiries, right? So, people say, well, how many inquiries is too much? I always say under 4 in the last 6 months is ideally what you want.
Right.
If so, go remove some inquiries, and then now we're in position to go get some personal funding.
I love it. You said something that was key. You talked about how one of the main things is making sure that 100% payment history, no collections, no charge-offs, none of the negative stuff on there that is literally going to keep us from getting the funding we're looking for. Well, let's flip it. Let's say we do have those items on our report. We do have a collection or a late payment or a charge-off. Most of the people that come to me that want funding, that's the number one thing that's keeping them from getting it. If I'm coming to a Darius Benders, if I'm listening on a Marvin Francois show and I want to learn a strategy or something I can do to go ahead and handle those items, what could Darius Benders tell me on the best way to go about doing that?
Absolutely. So we've helped people move negative items with a software we have called Metro 2 Compliance. So if someone goes to m2ficofixers.com, you can check it out. And essentially what it does is it leverages AI, artificial intelligence, to be able to identify the negative accounts that you have and what's going on with them, right? So every account must meet all 5 points of compliance. And if it doesn't meet all 5 points of compliance, by law, it must be removed. So what the AI does is it prints out the letters for you, identifying those negative accounts and what's wrong within the account. And then within the software, you can either print those out, mail them off yourself, or we work with third-party companies who can actually mail them out for you. So if you want to do nothing, you're super busy, you can use the software to even send the letters out. But otherwise, you just print them out, you send them out certified mail, and then we're in the game. And essentially, sometimes there is something called stall tactics, which I know you teach and all that. So if so, what I tell people is the average time for a credit repair process, obviously we can't guarantee people time frames, but I always tell people is 3 to 9 months is a time frame that you can expect that all your negative items are deleted. So understand that just like anything in life, it's about persistence, right? Sometimes people get stall letters, stall tactics, and they just like, oh, it ain't
It's
work.
over.
Yeah.
It's over.
It's like, no, bro. You had bad credit your whole life. Like, take the 3, 4, 5, 9 months, even if it's a year. What would a year from now your life look like if now you were in position and you could go out and, be able to maximize and start creating leverage?
What are your thoughts when we talk about credit repair? It's still a back and forth conversation I hear in 2024. What are your thoughts on freezing? Because I get a lot of questions about that too. Do we still need to freeze, even whether we're using the software, whatever the strategy, does freezing our credit report with like a LexisNexis or ShadeStream actually help us in terms of getting those negative items off? Is this something we have to do?
No. So when I was doing factual dispute, when I first started in the credit game, people were saying freeze. And, when we first learn things, we learn by the book. You learn from whoever you learned it from. So I was testing freezing the secondaries, and then I was taking other mentorships where people were saying, oh, you don't need to freeze them. So I've done both, and I'll be honest, the results have been about the same.
Yeah.
With Metro 2 compliance, you don't need to freeze them, but I've tested even with factual dispute and consumer law. You don't have to freeze them. Some people swear by it, some people don't. At the end of the day, if you stay consistent and you get your letters out, whether you're using Metro 2, factual dispute, or consumer law, you will get the results, but you just got to keep showing up.
So we built our personal credit report if we had no credit. And if we had bad credit, we have an understanding now of how to clean it, right? Let's say we want to strengthen our personal credit a bit more because, as you know, just as I do, everything we do on the funding side only helps what we do on the business funding side,
Absolutely.
right? So what are some of the different, we talked about credit builders. When we talk about credit cards, what are some different personal credit cards we could apply for to really give our report that last final push before we go and get the business funding?
Absolutely. So I know a lot of people say go get a couple of tier 1 credit cards first, which is great. My method and what we've been doing is we tell you to start with credit unions, right? And the reason why is because credit unions are going to put you in position to now where you have those $10, $15, $20,000 limits out the gate. And what that does is it positions us now when we go to the business side to now we have something called comparable credit. So typically what they're looking at on the business side is your personal report, plus the limits that you've already handled, plus your LLC, and we'll get into that as well.
Right.
So what I do is I tell you, if you got $250, right, what you can do is start with a credit union like a Navy Fed, right? And now what you do is you go set up a pledge loan. And what that is leveraging your money to now build what's called an internal score, borrowing against it. What they're going to do is freeze the money in a savings account, and it's called a pledge loan.
Okay.
Now what you can do is the next day, you can literally do it the next day. You call and say, hey, I'd like to pay off about 90% of my pledge loan. Now what happens is the money moves back into your checking, but now you have a loan that shows off as 90% paid down. You can set the rest up on auto pay over the next 3 to 6 months, right? Not only does that help you with Navy Fed, but it helps you with your overall report. But the reason that that's the play is because now versus if you just were to apply or even do a pre-approval, you don't have much of a relationship. But that little play right there gives you so much more leverage. We've seen our students and clients consistently get $20,000 to $25,000 after setting that up. But here's the play. That same $250 that we just moved back into our checking, now we can go to DCU and do the same thing. Say, hey, I'd like to open a share secure loan. We do the same play, 90% off. We set it up on auto pay, and now we can go apply for that credit card. They're going to give you $20,000 to $25,000 at the gate, and then you can take the same $250, or it's probably $230 now, and you can go do the same thing at a Nassau Federal Credit Union, a Pennsylvania Employee State Credit Union, and now you come out the gate with 3 credit cards that have a $15,000 to $25,000 limit. Now your profile is thick across the board, which now puts us in position to go get easily $150,000 to $200,000 on the business side.
How much on the business side? I want to make sure I heard you.
$150,000 to $250,000.
You sure about that?
I'm positive.
You swear by that?
I'm positive.
You stand on that?
I stand.
I'm about to put it to the test.
Let's get it.
I'm about to put it to the test. So we did all the heavy lifting on the personal side, right? You saying 150, 200K? You got to show me. I got to see it. Let's break it down for the people. We took care of everything on the personal side. We want to go and get business funding, right? We're early stage entrepreneurs. We need the funding to either start our business or scale our business. What's that first step that I need to take in getting access to business credit?
We need to be set up the right way, right? I call it optimize. So my 3-step process is foundation, optimize, and leverage. Optimize is looking the part, right? So a lot of people, they want big funding, they want big money, but we're not setting ourselves up like a big business, right? So what I tell you is that's first. Don't go just applying for things you ain't got nothing right. And what I mean by that is making sure that you have an actual entity first, right? Making sure you're structured typically as an LLC if it's your first business. You can go to, I think it's called Busy, right? And they'll set it, you can get your LLC set up. All right. Some key things that people mess up on is making sure that they have a proper business phone number, a proper business address. You need a phone number, you can go to call8.com. All right, you're going to get you a phone number. Don't use your cell phone because a lot of times what happens is you won't get denied for using a cell phone number, but what happens is every time you don't cross your I's and dot your T's, you now minus 2,500, minus 5K. So it's not that you're going to get nothing, but why get a little if you can get a lot?
Yeah.
Right. So next thing you want to do is get you a business address. All right. The key with this is making sure that it's not attached to a FedEx, a UPS, or a Staples. A big mistake. A lot of people come to me, and now you'll get automatically denied for that. All right. So what you can go do is go to opus.com. Make sure that you look up your address before purchasing it. So copy it, put it in Google, see what comes up. Make sure it's a commercial building. That's the best way that you're guaranteed to win. Now that we have that, we want to make sure that when we're naming our business, we're not in a high risk industry. So us being in the credit space, in the funding space, I tell people stay away from those names. So like one of my businesses, Bender's Enterprise. All right. So making sure that we use words like enterprise, worldwide, consulting, marketing. These are general names that get you funded high because they're deemed low risk. All right. And another thing that I tell people to do is when you're filling out the applications, I know we'll get to that more, making sure that, because a lot of us were happy, right? We're new in business. You'll go in there talking about, oh, I'm self-employed, or you'll put that you do credit repair or accident, and then you wonder why you got denied, right? Or you got $3,000 when you could have got $20,000 or $30,000. So those are some things I tell you to look for when you're setting up your business, making sure you're positioned, and make sure your business is listed. Google, 411, and Yelp.
Got you.
Yeah.
One of the things you talked about, we talked about structure and making sure we're not in a high-risk industry. I wanted to quickly touch on it. NAICS codes.
Yes.
Talk a little bit about that for people who don't know, and what role that also plays when we're filling out the funding application, because that's also very huge as well.
Absolutely. So NAICS code is essentially when you go for funding, they literally always ask you, what does your business do? And most people think they're just curious or just nosy. What they're doing is, and I know because the first time I did it, she said, okay, what code is that? And I didn't even know what she meant. This when I first, before I even knew about this business stuff, right? But what they're doing is they're identifying how fundable your business is based on the risk, right? So when you put something like you're in the cannabis industry or you're in the real estate industry, automatically the banks look at those as red flags. So because of that, you're going to either get denied or you're going to get lower limits. The most funded industries are typically education, right? So if you're a coach or consultant, pick education or consulting and marketing. These are deemed low risk. So because of that, when you go for the funding, you're going to get the higher side of things as long as your business is structured the right way.
Perfect. I love that. So we have some context on, like you said, the optimization, right? The foundation, we set that with the personal credit. We have some understanding with the optimization standpoint. Let's talk about actually going and getting the funding now.
Absolutely.
I want to make sure we give people a blueprint to where they're not knocking their head against a wall, or if you could have got 50,000, you're not stuck in 5,000,
For sure.
right? One of the terms we hear thrown around a lot in this space, as I'm sure you know, some people call it credit stacking. Other people call it a funding sequence. I want to make sure the audience understands how crucial that is when we're going out and getting funding. So for those who don't know, what is a funding sequence and what role does it play when we're going out and trying to get business capital?
Absolutely. So this is the third step in the process. We call it leverage, right? Foundation, optimizing, leverage. Leverage is understanding in the strategy, right? And everything has a strategy. You can go get you $20,000, $30,000, $40,000 just if you do the first two things I told you. But if you want to maximize and go get 100, 150, 250,000, then you need to understand a funding sequence. And what that is essentially understanding what banks are pulling from which bureaus, right? The reason this is so important is because if you understand that, oh, this lender is pulling from this bureau, now I can be strategic. I can say, okay, I'm going to go get 3 credit cards that pull from Experian. And what that's going to do is I now have inquiries only reporting to Experian. So now I can go check out some banks from TransUnion, and then I can go check out some banks from Equifax. Now, some people will be like, okay, well, why is that important? Well, some keys that we need to let people know is that on the business side, the reason it's so much leverage is because all inquiries can always be removed. So after we go maximizing this funding sequence, now we can go back, delete the inquiries, and go run more plays, right? Because any account that we get on the business side should never report to the personal credit report, right? So the inquiry might report, but the account won't, all right? So now that we know that, we have an understanding, okay, so I can remove these inquiries and go get more. So what I would tell you to do is you can stack either 2 ways, horizontally or vertically, right? Vertically essentially is I'm going to go get 1 credit card from Equifax, 1 from TransUnion, and then 1 from Experian, right? That's vertically. And then you can stack horizontally where you're going to go get all Equifax, all TransUnion, and all Experience. I've tested both. There really is no difference. Some people will tell you, oh, open multiple tabs, click, click,
Hey,
click.
man, you beat me to it.
Yeah, that ain't it. That ain't it.
Yeah.
And when you first get into it, you try it, right?
Yeah,
So these are tested and trial. It doesn't make a difference. All you need to know is which bureaus are pulling from, what banks are pulling from what bureaus. If you know that, we can go get busy. You want me to give them a whole funding sequence?
Oh, let's go. Let's do it. I mean, let's break it down. Yeah, for sure.
Bet.
Let's go.
So make sure y'all pause this part, go back, rewatch it. This is how you go get $100,000 to $200,000 in funding, right? So if I were starting a funding sequence, what I would do is, let's say I'm starting with Experian, I would go check out Chase, and I'm always going to start with Chase first because they have a 5-24 rule. What that means is if you get more than 5 credit cards within a 24-month time span, you're pretty much guaranteed to get denied, all right? So we always want to start with them. Another reason we want to start with them is Chase is giving out that bag, y'all. They're giving out the most limits. I've been helping people consistently get $75,000, $80,000 off of 1 credit Unlimited card. What you can check out is either the Chase Ink Unlimited card or the Chase Business Cash card. These are both 0% for 12 months, right? And they both have a crazy sign-on bonus. I think it's like a free $750 if you spend more than $3,000 in like 3 months, right? So I would start there, all right? The second lender I will go to is American Express. Now, the reason I love American Express is because we can stack within that one bank, right? And what I mean by that is American Express will allow you to go get up to 5 business credit cards with just one inquiry, right? What you want to do is build a relationship on the personal side. You can do that by going to Google, type in American Express pre-approval or pre-qualify. It will bring up that link. When you get pre-approved with American Express, 9.99 times you have the offer. Some places it doesn't work like that, but they will. So then what I would do is move to the business side. All right, I would recommend new entrepreneurs. Start with the blue cards. All right, start with the blue cash and the blue plus, right? The reason being is because these are 0% for 12 months, right? When we talk about the gold, the platinum, and the plum, they look cool, they look shiny. I know Instagram got y'all thinking it's lit, but those come with annual fees.
Yes, they do.
Those also are charge cards. What that means is those payments on the platinum and the gold are due every 30 days. If you don't have it paid back and forth within 30 days, that interest is high as hell, right?
Yeah.
With the plum card, you get 60 days, all right? So you have a little more time, but just do your due diligence. If you guys are running things like Facebook ads, the gold card is great. You get a lot of return. You're making money on things that you're already doing, but I would start with those blue cards if you know it. So now we got 5 credit cards from one lender, and then we have Chase Ink Unlimited, right? Let's say that's 6 credit cards. Then we can go to Navy Fed. Navy Fed, most people think it's TransUnion because on the personal side it is, but on the business side, they're going to pull from Experian. And as we know, Navy Fed gives good limits. I would say the limits typically starting off are between 10 and 20,000, but that's still good money. All right, now we got 7 credit cards.
Are we still on Experian?
Oh, we still on
Father.
Experian. we ain't even go crazy yet.
Okay.
Right? So that's just Experian alone. So let's say you only average 10,000 a card, right? We have 70,000
On one bureau.
on one bureau.
Father God. Go
All
ahead.
right. So now when we go to TransUnion, understand we can go check out banks like US Bank, right? 0%, 15 months. We can go check out Univest. All right. Univest is another 0% APR credit card starting out even for brand new businesses. And then we can go to, this is a gem for y'all. I want everyone watching to go to Google, right? Type in Elon Financial Banks in your zip code. Now what's going to happen is Elon Financial is just those community type banks. They may be in your neighborhood. They're small. You might pass them all the time, but they're powered by a third party company called Elon Financial. These banks are my favorite. Why? Because they're all 0% for 18 months, right? They have 2 credit cards and all the websites look exactly the same. You'll see one business credit card, 0% 6 months, and then you'll see another one that's 0% 18 months, right? It never fails. You don't need a relationship. You don't need to go in branch. You can literally apply right online and they can approve you, what we call an auto approval. All right, typically they'll start you off somewhere between 15 and 25,000 if your credit profile is in order. All right, so now we got 3 cards that pull from TransUnion. Let's say we only average 10, we had 100,000.
And we haven't even gotten to Equifax.
We ain't even got there yet, right?
Oh, Lord.
So Equifax.
He had to sip water to
You know
prepare for Equifax. Go ahead, brother. I don't want to interrupt you. Go ahead.
So for Equifax, all right, a lot of these banks transparently are regional banks, right? What that means is they are geo-based. So your business has to be set up in these states in order to get funding. Otherwise, we can get what's called a foreign entity. A foreign entity just means that when you set up a foreign entity, your business is now able to get funding in that state, even for small lenders that only fund to businesses in that state. So you get a foreign entity, and then you go to Opus. You get a business address in that state, and now we in the game. Now we can go to all those small banks that only fund to businesses in that state. But from Equifax, you all can check out KeyBank. All right, KeyBank will give you up to $50,000 no doc. They have a business credit card and a business line of credit. Typically, they'll make you split that difference, so they'll have you divide the $50K between the two. You can go check out Truist. Truist is one of my favorite, y'all. If you go check out Truist, they will allow you to double dip. What that means is get 2 business credit cards with just 1 inquiry, right? Both of their business credit cards, well, they have multiple, but the 2 favorites are 0% for 9 months. So make sure that you do your due diligence. I've had people, they apply too fast and they go and get I think it's the travel card, but it's basically 15% interest out the gate. Stay away from that, 0% 9 months. If you have been in business for 2 years or more, you can also get the business line of credit with Truist as well. So now we're looking at potentially $100,000 from one lender. All right. And then what you can, it gets crazy. And then another one y'all can check out is Citizens Bank. All right. Citizens Bank is also jail-based. They're giving out that bag, 0% APR credit card, even for brand new business owners. And that's how y'all can go out and get $150,000, $200,000 in funding. And we ain't even, that's just off the 0% APR credit cards, right? So y'all go crazy with that one. Yes, sir. Anything for you, bro.
Podcast is done. The podcast is finished. 150 to 200,000 funding sequence off the top. No, you didn't have to go on your iPad to just rattle it off.
Yeah.
We could take that funding sequence and go out and get 150, 200,000.
Easy.
Listen, if you're an entrepreneur struggling to get funding because of your bad credit, then this video is for you. You see, I understand that when banks deny businesses for funding, they're not just denying businesses the capital they need, but they're also denying business owners the resources that they need to build the business of their dreams. And as a business owner, I've seen this happen over and over and over and over again, but I want you to know that there's a solution. Because here at Takeoff Financial, we've helped countless entrepreneurs just like you go from having poor personal credit and not being able to access funding to having perfect personal credit that they were able to leverage to access 5 to 6 figures in funding, and we want you to be the next one. So click the link above or below this video to secure your free consultation, and we'll see you on the other side of success, family.
There's so much there, brother. Let's break all of that down, right?
Absolutely.
When we talk about a funding sequence, like you said, it's all strategy because we want to minimize inquiries and maximize how much capital we get access
Facts.
to. Let's say on the flip side, because I want to create opportunities and eliminate excuses with this podcast, right? Let's say we're on the other side of things. All right, Darius Benders gave me his funding sequence. I want to go and make my own funding sequence, right? One of the biggest questions I get for those people, the DIYers, if you will, is, all right, how do I find out where these banks pull from? Is there a strategy there to figure out what credit reporting agencies certain banks pull from? And if so, what is that strategy?
Absolutely. This is literally how I found the play I just gave you. The way I found out a lot of that stuff is ibanknet.com.
Say it again.
ibanknet.com.
Okay.
And when you go to ibanknet, it literally will allow you to see every bank in every state in the U.S., right? So you can go to ibanknet.com and you can source it based on your city, your state. You can also source based on national banks, based on credit unions, right? So what you want to do is you can literally check out, if you're looking for these smaller institutes that we just talked about that are going to give you these high limits, simply call. Most people think like the banks are against us. All you do is you literally call, you ask, hey, I'm wondering which bureau do you all pull from? How about take it even further? Hey, I'm wondering, do you guys allow double dipping? Do you all allow me to get multiple products within one inquiry? We think it's us against the bank. It's not. They're your friend. They want to give you money. They want to give you money because they're counting on you not being able to keep up and you going in, you getting a lot of interest and you having to pay back more debt. So what I tell you is just treat them how they treat you. And your job is to take this money and go create cash flow so you beat them, right? So that's literally how we go find our funding sequence.
I love it. Let's talk a little bit more about that because you mentioned a couple of different banks. When we're going for funding from these banks, I hear a lot of talk about applying online versus applying in branch. You know, you and I talked about it earlier. In our earlier days in the credit space, I remember the myth was you got to be up at 3 a.m. with 40 tabs open because that's when everybody's sleep. And then that's how you're going to get the max amount of funding, right? Things have changed since then.
Absolutely.
So for people who are watching, talk a little bit about it. Well, is there a difference in going for funding in branch versus going online? And if so, how much of a difference does it make?
Great question. So if you have great credit, like what we just talked about, you built your profile out, you're gonna get good limits online. But what I always tell people to do is build relationships, right? Relationships is key. Like when you're going for funding, you know, you just met a person, right? Imagine like it's like a fella asking a lady to marry him the first time they link up, right? It don't make too much sense.
Right.
She probably gonna say you crazy as hell. So
Right.
you coming out, you asking somebody for $30,000, $40,000, $50,000 in funding with no rapport, they're gonna look at you the same way. So what I would do is I would go in branch if you can. Now what I would do is look for relationship managers, right? A lot of people don't understand that there's people who can literally push applications through. That's one thing we do with Chase. So people are like, how you get $75,000 limits? We have access to relationship managers. What that does is it puts us in a different ball game than someone who's just applying online, right? Because we're now able to sign a DocuSign. We're now able to push it right through with a special note that essentially says this person is coming directly from a relationship manager. But even if you don't have access to a relationship manager, go build a rapport with your regular banker. Go let them know what you're looking for. Let them know the products because they're going to be able to let you know the ins and out of what you're looking for and what the best scenarios are. For example, when I first got in the credit game, you know, I wanted to be a car specialist guru. So what I did was I went to DCU in person. I remember my banker, shout out to Barsha. She was the one who told me that I could get 2 auto loans under the one inquiry within a 30-day time frame. Because what I did was I said, hey, y'all pre-approved me for $50K. Can I go get 2 auto loans with this? She said, no, you can't. But what you can do is go get the car, the purchase and sales agreement. We'll approve it. And then you can apply again, get a second one, and we won't pull your credit card. We won't pull your credit again. I said, dang, that's a gem. But if I wouldn't have asked and I wouldn't have built that rapport,
Yep.
I was bringing her hot chocolate and all that because this is what I was taught.
I love it.
Right? Then I wouldn't have known to play. Another thing, after I got the second auto loan, she said, are you looking for a credit card? I said, yeah, but I don't want another inquiry. She said, no, you can apply for a third product without another inquiry. So now, because of the questions I asked, because I went in branch, I'm now able to turn what I thought was an auto loan play now into 2 auto loans that cash flowed me every month, plus a $25,000 credit card, which I took $5K off that car, went on Facebook Market, got a third car, and started making money that way. So you definitely want to go in branch, build relationships if you can.
Oh, I love this. I love this. I love this. So if I'm watching this, then you talked about the importance of the difference of applying for funding online versus in branch. People hear that term thrown around all the time, building relationships. I've heard different breakdowns and strategies of what that process looks like. If you're teaching somebody that's just coming into this funding space or looking for funding, what is the actual best way to build a relationship with a bank?
Absolutely. So the first thing you want to do is go in, open a checking, open a savings account, right? That's step one. That's like, first time we hanging out, okay, hi, how you doing? Then what you do is drop some money in that account. That shows a little more rapport. It shows a little more skin in the game. It shows a little more invested. So what I would do is go anywhere from $50 to a couple $1,000 if you can. But I don't want anyone listening to think you need to drop $1,000. If you don't got $1,000, go drop even $50 in that account.
Yeah.
It literally shows that you have some skin in the game. That's what they're looking for. And what I would do is if you can set up some sort of direct deposit, guess what? That's going to even further enhance that relationship. If you can't, maybe you can do a bi-weekly deposit, go drop a little money in there in person, right? Now we're building. What I would do is I would do that for about 4 to 8 weeks, right? As soon as day 31, so, exactly a month. And then I would apply for that product or those products that you're looking for, because of that, then you meet all the criteria. You have the good profile. You have everything set up. Now we've built a relationship. Then what I would apply for that product. But what I would do if it's these smaller credit unions is make sure that you go set up that product internally with that place so that they can give you those higher limits. So those are some ways that you can tangibly go right now and start building a relationship with lenders.
I love it. Let's talk bank tiers, because that's also a conversation that I think is extremely important. You named a couple of different banks earlier and a couple of different tiers, but we didn't actually break that down for the people. For those who don't know, what are bank tiers and why are they so important when we talk about creating funding sequences and just going for funding in general?
Absolutely. So bank tiers are essentially, they're going to be like the main banks, right, that people know of, like tier 1, your Discovers, your Citibanks, right? Then we talk about our tier 2 and tier 3. Those are like your smaller institutes, but like we talked about, they're giving out that bag. But the reason you want to have a mix of tier 1s and tier 2s and tier 3s is because when we're going for funding, although the credit unions might give you $20,000 out the gate, it doesn't hold quite as much weight as having a tier 1 bank. So you want to make sure you have at least one, whether it's Discover, Citi, Wells Fargo, because that's just going to make you stand out, right? Having that good mix. But these tier 2s, tier 3s, your community banks, Elon Financials, your credit unions, all right? Having a couple of each of these are going to put you in the best position. My recommendation on the personal side is always having 3 to 5 personal credit cards before getting onto the business side.
Okay. So diving a little bit more into that, we're talking about different lenders and different types of tiers. Another question I get all the time, because you have some people that, they've been trying to restore their credit. It's not really where they want it to be. They know it could be better, but it's not worse. It's kind of just somewhere in the middle. Are there lenders out there that we can look into to where if our credit isn't the best, that will still go out and give us funding for us or for our business?
Yeah, absolutely. So if you guys got bad credit, but you have business revenue coming in, then they're absolutely subprime lenders. Some people call it alternative lending. And what they'll do is they're going to base it off your time in business, one, the amount of deposits that your merchant or your payment processor has coming through. And then, that's the criteria, right? So a couple of y'all can check out is Rock Financial.
Say that again?
Rock Financial, ROK.
Okay.
ROK Financial. What they're looking for is at least 6 months in business, and they're looking for an average of at least $5,000 a month over the past 3 months.
That's it?
Through. That's it.
Say it one more time. Rock Financial?
Yeah, Rock Financial.
Sorry, go ahead.
No, you're good. Now, I want to be clear, though. The worse your credit is, though, the higher the interest is. So what I want you all to do is do your due diligence and don't just take any deal. My job here is to put you in a better position, so not a worse position, right? So don't take any crazy rate that you can't pay back. Sometimes it might be daily, paying them back weekly. Just make sure that it makes sense for you. If you have a cash flow in business, you can take the rest. By all means, do it. If you're newer in business, don't don't over leverage yourself to where you put yourself more in the hole. Just take your time, get your credit right. But that's one. Another place y'all can check out is On Deck. On Deck is looking for at least 1 year in business, and they are looking for an average of about $10,000 a month coming through your business or your merchant payment processor. But if you have those things, they're giving out that bag. And then a third one I can tell you all is they're not a subprime lender, but if you only got a 650, 660, you can go to American Express and check out their business line of credit. And what they're looking for is 6 months in business and average revenue of only $3,000 coming through your merchant. That's it.
Hey,
and
man.
they get you out of bad. They just gave somebody we got $48,000. They're about a year in business.
This is good. This is good. Let's talk about this then, right? We joked a little bit earlier about the 15 tabs and applying for funding and things like that. Another thing I'm sure you remember coming into this space, I remember being told that we have to get net 30 accounts, Quill, Granger, and Uline. We got to buy 18 reams of paper and staplers and construction vest and get a Paydex at 80. You laugh again. I mean, you heard the same exact thing I heard coming into space. And I'm still getting these same questions in 2024. Like, Marv, do I got to, spend all this money with Quill, Granger, and Uline before I go and get funding? When you're speaking to clients or people that are coming to you for just consultations, do we still need to build business credit in 2024?
100% now. I'm going to be transparent with a camera. I'm going to be transparent with you. I don't do none of that. I don't do no Quills, no net 30s, no none of that, no nothing. We literally do the 3-step formula I showed you. Foundation, setting up your foundation right, optimize, structuring your business right, and then running the plays. All right. You don't need any net 30s, any of that. All that stuff is extra. I know Instagram can have y'all thinking you got to go through hula hoops. And when I first started business funding, when I heard about all that stuff, I was actually not gonna do it because it
was just a lot.
Confusing. People come to me, hey, I got to pay Paydex to this. You got a 500 credit score. We can't get you much. Here's the thing, right? There are certain products that you can get. Like people come to me, they get little Home Depot cards and stuff. But one, the interest rates suck. And two, I've never seen somebody get $30,000, $40,000 limits with these cards. What you want is leverage. You want big money. You want 0% APR so you can go out and actually make some money. For example, you want to start a business. Now you have the ability to create cash flow. You got a year before you have to start paying back interest. That's leverage, right? What are you gonna do with $2,000-$3,000 and you got 20% interest and you can't
just
really
cry?
Exactly. It's a waste. You might as well just borrow money from your family and friends at that point. You know what I'm saying? So all you need is a 3-step process. You don't need any of those net 30s and Quills and Grangers.
You also mentioned this too when you were talking about Truist earlier. You talked about lines of credit, different funding products, because there's so much verbiage that's thrown around. We have business credit cards, we have lines of credit. I hear about corporate cards, all these different types of business funding. How do I know what funding product best fits me and my goal and why and how much funding I'm looking to get? Whether I'm a real estate investor trying to get $50K or I have a marketing agency and I need $75K, right? What are the best business funding products that I should be going for?
Great question. So first thing I'll do is I'll break down the difference between a business credit card and a business line of credit. So the difference is this. When you get a business line of credit, essentially you're getting cash, right? What happens is they drop your money into an account under that lender called a business line of credit. Now, you can move as much money from the line of credit into your business checking account as you want, right? Your interest will only accrue on the amount that you moved into the business checking. So, for example, if you got approved for a $20,000 business line of credit and you only want to utilize 10 right now, the interest rate is, let's say, 10%, you're only paying the 10% on the 10K that you're using, right? The cool thing about it is, like, for people who do real estate and things like that, a lot of times they're looking for cash. With credit cards, we would have to take one extra step. We would have to liquidate, right, with like a milli or a plastique. But with a business line of credit, we have the cash to be able to close on the house or to be able to go buy things that maybe you couldn't buy with a credit card, right? With the credit card, you do have merchant fees, so some liquidation does cost a little bit. It's minimal if you do it the right way, but it costs less. So the difference is essentially cash versus having to swipe the card.
I love it. I just want you to know, when this episode drops, you know that you're going to have some people that's going to DM you because you basically just gave away somebody's like $5,000, $10,000 mentorship program.
We do this.
I'm just letting you know. You're prepared for this.
That's light.
All right, brother. All right,
the game.
So let's do this then, right? Because I have the info on the personal credit side. I have the info when it comes to, like, I have everything I need when it comes to getting business funding. Let's say I want to now leverage this information to start a funding company. That's another level right there. Talk a little bit about that. How can I go about, well, first off, before we even get into that, to take a step back, for those who don't know, when we talk about business funding or starting a business funding company, what exactly is a funding company? How does that work and how can I start my own?
Absolutely, but I feel like I don't want to leave. I want them to leave here with no questions. So
Okay.
can we go over one thing?
Let's do it.
So I didn't tell them two things.
Let's do it.
I didn't tell you all business lines of credit. Your business has to be in business for 2 years or more.
Good.
Right. And then another, I know someone's going to say, well, what's this no doc funding he's talking about? Right.
Break it down.
So no doc funding means you have the ability to walk into the banks or apply online and have no proof of income that you have to show to the banks to be approved. Because I know someone's listening and they're going to be thinking, well, dang, this sounds good, but I don't make money. My business doesn't make money yet, right? So lenders, when they ask you questions like, what is your business revenue? They know that you're a new business all the time, right? So that question means predicted or stated income. So what do you predict that your business is going to do, right? So if your credit criteria meets the points, your business is set up the right way, you have those comparable credit lines, and you understand what and what not to put on applications, you can literally walk in and run that exact sequence that I just gave you without any income. I just want to make sure that they understood that. I want them.
I love it.
All right, I just want to make sure. And yeah, that's it. So you were asking about a funding company?
Let's talk about the funding companies. I thank you for going back and breaking that down. If I want to take all this information that I just got from Darius Benders, I want to start. I don't want to just fund myself. I want to fund other people. What's the first step that I need to take and start on my own funding company?
Hey, business owners, what if I helped you get access to $50,000 in business funding for $1 a day? Would you be interested? Well, inside of my credit mastery community, you're going to be getting exclusive access to our in-depth training program that's worth tens of thousands of dollars to give you the exact strategies you need on how to restore your credit and on how to properly structure your business. You're also going to be getting access to a financial consultant with over a decade of experience in the funding space that'll help you reach your financial goals in half the time it would take if you were to do it on your own. And we're going to be giving you 2 coaching calls every week that'll give you the exact banks you need to go to get access to $50,000 to $100,000 in business funding. This is the same community that helped Pat get access to $50,000 in funding from Chase, helped Alvin get access to $8,000 in funding from Amex, helped Matt boost his personal credit score by 150 points, and helped Donna delete a bankruptcy from her credit report. So if you're interested, click the link above or below this video to join now, and we'll see you on the other side of success. Let's go, family.
Absolutely. See, the same skills that I just taught you, you now have the ability to do applications. So now we can turn that into a business, right? And I say this is the best business. The reason being is because, people say if you want to be liked, go sell ice cream. I say if you want to be liked, go get people some money.
Facts.
Right? And nobody ever told me no,
Right.
right? So you got a lot of problems in life, but leads won't be one of them. So what I'll tell you is this. It's essentially a process, the same process that we just did, but now we can turn around and do it for other companies. So what you would want to do is you would want to find people who are qualified. What does that look like? I just gave you that. 700 plus, 10 accounts, all of those. Once they qualify, what we do is we have someone simply fill out a JOT form. What that does is it lets us know that their credit criteria in order, and then it lets us know that they have to upload their report so we can see and make sure. Because people will tell you that they meet the criteria, but you got to make sure yourself. Once they do that part, we literally do a call. We let them know our success fee. The way you get paid as a funding company, and this is why it's the best as well, we don't charge anything up front. So imagine you coming to someone, you say, hey, I want to get you $100,000 of funding, and I don't want to charge you anything up front. They're going to think you crazy as hell.
They're going to jump for joy.
Right.
Yeah.
But the beautiful thing is the back end is so amazing. So what we do is we have a 10% success fee. So we get someone $100,000, that's a $10K payout. You get someone $200,000, that's a $20,000 payout, right? So when I started this business, I was like, there ain't no way this is legal. Like you would really be thinking like this is crazy.
Right.
Yeah, that's really the process. And then what you want to do after they agree to the 10% success fee, all you have to do is we call it an onboarding form. They fill out all their information, their business name, business address, everything you need to know about their business, and all the questions are tailored to applications. So after we have that onboarding form, we no longer need the customer. We let them know we'll keep them up to date with approvals, denials, pendings, if they need to do anything, and we handle everything. The only thing you need to do is let the person know if you need to text a code. Maybe you're doing an application and you need the verification. That is it. So just like that, we can run that funding sequence, and we can literally make, even if you only found one funding client a month, you have a 6-figure business, $12,000, 12 months, $144,000, right? But then I'll show you how to leverage other people and build that clientele quick. If you want me to get into that, I'll get into that.
Yeah, we about to break it down. Let's go a step further, right? And you slightly touched on it, and I wasn't gonna let you get off here because I know right now in the funding space, this is one of the biggest talks, and I had to touch on it. Let's talk about and this is all within the realm of the funding company, relationship managers.
Yes.
Because from what I understand, this is like the next level of just making what was already a very beautiful business to run even more beautiful. What role do relationship managers play in us not only just creating a funding company, but creating one that is extremely profitable and getting our clients as much funding as possible.
They changed the game.
Yeah.
Like by yourself, you might make $10,000 a client. You got relationship managers. Now we're talking about $25,000 commissions, getting people $250,000 in funding. Right. The difference between a relationship manager and not having one is when you don't have one, what you're essentially doing is you're going in the traditional algorithm, the same one that everyone goes through, right?
Yeah.
They're going to look at certain factors. Credit was cool. You had a little relationship here. You didn't. You might go get you $10, $20, even $25,000, right? But when you have a relationship, that $25,000 can easily turn into $75,000. The difference, let's say 10 clients, that's a $50,000 difference per client. 10 clients, that's a lot of money, right? It's a lot of money. 5K times 10 people, extra $50,000. So what I tell you is you can go in and you can build relationships. A lot of people just don't ask the right questions. So typically I literally ask when I'm going to build these rapports, certain questions, right? Hey, I tell people I run a business where we help people consult, right? So we work with a lot of clients who are looking to grow their business and they all need capital. All right. When you say them that, they'll say, okay, great. I also let the relationship managers know a lot of my people have really good credit. They love that. When you say that, their eyes light up. A lot of people don't know relationship managers, the way they grow in their companies, like my Chase guy, he's grown. He just won an award for the top in his region. So people think, oh, you should pay relationship managers. No, you don't have to pay them. They're already growing within their company. So they're grateful that you're sending them qualified people because 7 out of 10 people got bad credit, which means they can't qualify. So when someone like me comes in and let them know, hey, I have all these people who qualify and I know because I'm teaching them, right? Now they're super excited. Their eyes light up. So now what we do is anytime we have someone, we usually have to send on our relationship manager some info about that person. For mine, it's just the name, the business name, where the business is located, their business email and business phone number. Once we send in that, we CC him in with our client, and then from there, what happens is he gets on a quick Zoom call with them, sends them a DocuSign, and just like that, he is able to manually push their applications through with a note, letting them know it came from him. So that's how that works. Oh yeah, game changers. Hey, you ain't nobody giving out all this.
No, nobody. And to give it, to even add on to that, to give another gem, another great thing about relationship managers, and I have to say this, most people don't even know this, but relationship managers, depending on what banks you go to, they can offer give business funding offers to your clientele that they wouldn't get if they just go to the regular Chase website. You understand? So listen. Yeah. Hey,
lock in.
Lock in. So, all right. So I have all this information about funding. I have all this information about how to create a funding company, relationship managers, everything from top. I'm hot. I'm ready to go.
Yeah.
I ain't got no leads. I ain't got no clients. I don't have nobody banging down my door trying to get some funding. How can I, if I'm starting, let's say I want to find my first 5 funding clients. How do I go about doing that?
All right. Remember this. Who has my money? Who has my money? That 4 words, right?
Okay.
The biggest thing that people do is we always think you have to find the work. Most people think, oh, I have to do this. I got to be on social media. I got to be in the DMs. I don't teach that. You can, but who has my money? I go to credit repair specialists because guess what? Most credit repair specialists, no offense, y'all are scared to do funding. Not you. Not you.
You're not lying. No, you're right. You're right.
They're scared to do funding. Right. So what I do is we have a DM. I teach all my people. I have a DM. Essentially, hey, how are you? My name is Darius. I run a funding company. We funded over $24 million in the last 18 months. I see that you're crushing it with credit repair.
Yeah.
I would love to help you add an extra $50,000 to $100,000 this year without doing any of the work. How does that sound? Are you free for a call?
Come on now.
I'll
clear my calendar right now. You understand?
You feel me? So once we get them on a call, we simply break down the breakdown.
Right.
We'll let them know we have access to the relationship managers, or even if you don't have access to relationship managers, you let them know what you've done, your funding sequence. You let them know about some testimonials that you've gotten other people, and then from there, typically what we'll offer is somewhere between 1.5 and 3% for referral partnerships. So essentially, we go get a person $100,000, our payout will be $10,000. If it came from that referral partner, they're gonna make $1,500 to $3,000 just for sending you work
and just chilling.
If they send you 3 of those a month, if they have a credit repair organization that's running, they easily can send you 3 a month. That's an extra $9,000 that they're able to make, and now you get to make $7,000 a pop without not having to spend money on leads, spend money on ads, without having to be on social media all day. So that's one way you could do. Another thing we do is Realtor. You go to realtor.com, and what happens is now all of in your area, or you can do it corporate national. Now, all these realtors who have people who are looking to buy homes, guess what? They need funding. They need closing costs. Some of them need credit repair, whatever it may be. You can offer them that same 1.5 to 3% and let them know that they can make an extra 6 figures this year. If you just go copy paste a message to 500 people, even if you only got 1% to respond, guess what? Now we're in the business. Third thing you could do is tax businesses. Tax businesses, they deal with people who are getting access to the money. What's the first thing we're always pitching, especially top of the year? New business. Oh, new year, new me.
Yep.
So now guess what? Come to me and I'm going to get you funded to help you now start and escalate this new business that you want. So if you literally go on Instagram, you type in credit repair specialist, you can send a copy paste message to all people who are in there. And now if you go talk to, let's even say 20 people, let's say 5 respond, let's say you close 3 people, you now have 3 referral partners who can send you work. You do the same for realtors. You do the same for tax brokers. And this is how you can do it. And say you don't want to do the funding. This is where it gets saucy.
Talk to me.
One of my students did $22,000 last month, and she did not fill out one application.
How?
You know what she does?
Talk to me.
She's a funding broker. So she doesn't do the application. She partners with the people who do. So you could come to someone like me where my team does the applications and all you are is their middleman. You promote that you do funding. You promote that you have the infrastructure. You can promote my results because I'm the one on the back. Essentially, I'm your ghost funder, someone like me. Yeah. And now you partner with me. You're the middleman. Let's say we're charging 12%. You can send the referral partner 4, you keep 4, and then me and my team will get 4. Change the game, bro. Change the game, bro. 6-figure play without doing nothing. 6 figures from the crib. 6 figures with your feet up watching Netflix. It's different on this side, man.
So this is because now we're talking cash flow.
Yeah.
We're talking about really turning our credit understanding, just turning credit to cash flow. Mm-hmm. This is okay. So then let's talk about this, right? We started off the episode, and one of the things I talked about was a lot of the testimonials that you're getting of individuals that are getting $10,000, $20,000 months, and so much more. And I think this is a really great way to just tie everything all together. For those individuals, because you have a lot of people that want the funding and want to start businesses. Let's say we have some people that maybe they don't want to start a funding company, but they want to start making money online, right? If you could just give a quick and easy and simple framework on if I'm watching this and I'm trying to make my first $5,000, my first $10,000 online, what does that step-by-step process need to look like? Absolutely.
So a lot of our people who are doing services, whether it's credit repair, funding, and now they're looking to expand. Maybe they don't want to do the service industry anymore. Mm-hmm. What happens, we teach them to turn their expertise into now a digital online business, right? Mm-hmm. So we talked about like getting funding or getting people funding, right? But what if you could just, instead of doing the service, you can now serve people. Now I could teach Marvin Francois how to do what I do. So what we do is a lot of our clientele, they now like, okay, cool, D, I want to do what you do. They want to do what I do. So they want to teach. So we teach them how to set up their education business, which I talked about earlier is literally one of my favorite businesses because of the impact. Mm-hmm. All right, so influence the impact is kind of how we got the name. But you could literally market yourself, right? Start talking about the 4 easiest ways to show that you're good at what you say you're good at. The number one way is to simply show it. Most people just don't do it. They ask people for the sale, but they don't lead with value. So what I teach is lead with value. We create something called value content. Mm-hmm. You can go to ChatGPT and use this exact prompt, right? The prompt that you're going to put in ChatGPT is give me a list of the 10 most common asked questions when it comes to X business. X is your business. Now what happens is that's based on research from ChatGPT. So now you put out this type content online. Now it lets people know that you're an expert in that field, right? It might be questions like what you asked me. Mm-hmm. Another gem I'm going to give them is say on ChatGPT, say create me a mock-up podcast interview and the interviewer asked me questions around how to grow what business. What is your business? Now you use that prompt. It's going to give you questions. All you have to do is answer those questions. You could do it with an iPhone. You don't need a professional camera. You don't need any of that. Now what we can do is a few options. We can take those videos that we just recorded. We can put it as Opus.Pro, and Opus.Pro is now going to use AI to cut up those clips, give us the captions, give us the TikTok, the Instagram, the YouTube shorts. And just like that, we took what might take someone 3 hours now, an hour and a half. Now they got content for a whole month. Now what we do is we package our information, right? You can do that right in school. You could do it in Kajabi, but you want to package your information to where it's digestible for someone else to be able to learn, right? So what I did was today, this was like a semi-masterclass. I could spread this out over modules, right? What I tell people is package your modules short. People don't want to watch 30-minute modules. Facts. They're going to fall asleep. All my modules in my course, 2 to 5 minutes. Max. Because I understand when someone wants to go back and watch the information, they just want to get right to it, right? So now what we can do is one of my favorite ways to sell is one-to-many, right? So we'll show you how to essentially do that. But essentially, the best way to sell your services or your products or your digital coaching business, whatever, is break down misbelief. Like that's what we did at the beginning. Oh, you think you need Quill, Granger, all those? No, you don't, right? Introduce a new belief. What if I told you as a brand new business, you can get funded? What if I told you you don't need 800, you just need 680? Breaking down new beliefs, providing evidence behind those new beliefs. Evidence might be 83% of small businesses fail due to lack of funding. 73% of black businesses get denied for funding, right? That's evidence. Third-party proof, Elon Musk buying Twitter with business funding. If he's the richest man in the world and he can do it, why wouldn't you? It's third-party proof. Another way is testimonials. I talked about students, talked about clients. And then the last way to provide evidence is your personal testimonial. So that's the third way. That's the last way to provide evidence. And then the last thing we do is we take people from possible to probable. That's what you want to do in any sort of one-to-many selling opportunity. What I mean by that is if I do funding, guess what? On a live class, I'm going to get them funded live. They came in like, oh, this stuff sounds like it works. Now they're like, well, damn, I just watched people get funded. Even if they didn't get funded, right? Or if you have a software, show people a walkthrough of the software. Now you make it real for them and you shift their beliefs. So that's the best way that you can sell your high ticket offer. And then lastly, you just want to make sure that you deliver on the promise that you say you're going to deliver on. So the key to this coaching business, digital business, is just loving on people at the end of the day.
And on that note, ladies and gentlemen, Darius Benders. I'm not going to be able to sleep tonight.
Yeah.
I'm not going to be able to sleep tonight. Listen, brother, I know you have a 5-day challenge coming up. I can't let you come on here and give all this value and not give you the opportunity to let the people know about this challenge. For those who don't know, talk a little bit more about that.
Of course. So what we just went over today, if y'all thought this was good, my bag is super heavy.
Oh, there's more.
Oh, there's so much more.
I thought you gave away the master.
Nah, not even close.
Go ahead.
Right. So over 5 days from October 28th to November 1st, I'm going to be coaching y'all live every single day. We're going to be showing up, and I'm going to be breaking these things down more in depth, how to build your credit, how to get funded. Y'all are going to have an opportunity to get funded live. Last challenge we did, we funded over 800,000 live. So you make sure y'all are there for that. I'm going to show you all not just how to get this funding, but then what to do with this funding. I'm going to break down how to start and run a funding company, how to go find your first 5 to 10 clients, and then I'm going to show you all how to scale. A lot of you are already currently running businesses. You want to know, how do I make more money faster? So I'm going to break that thing down on day 4, and it's going to be saucy. So make sure if you want a ticket, either click the link in Marvin's bio or DM me the word bootcamp on Instagram at Darius Benders. Now, for the first 32 people, tickets are only $32. After the first 32 people, the tickets are going to $320. So if you want to save 10 times the money and get $100,000 worth of game, make sure that you DM me the word bootcamp ASAP.
I'm already in the boot camp right now. Y'all don't even know it. I'm literally in the waiting room right now, ready to get the game. My guy, Darius Benders, my brother, it's always a pleasure having you on here. Every single episode is jam-packed with value. I appreciate you immensely. And more importantly, I appreciate each and every single one of y'all. And if you haven't already, what are you doing? Take a second, take a minute, take an hour out of your day right here, right now to just go ahead, slap the like button, show this episode some love, tell a friend to tell a friend to come back and watch it again. And as always, ladies and gentlemen, I'm Marvin Francois. That's Darius Benders. Y'all have been good. We've been great. This has been amazing. Thank you, and God bless. Peace, family.
Peace.